we could be anywhere, where would it be?
I think that we are facing an extremely important moment for the entire covered bond industry, I would say, and also the securitization industry. There are challenges in front of us, there are opportunities, and the focus of this panel is really to allow all together to understand where we are going to go and what is the future of this industry and what is the future role of this product in the coming years. Now I think among this audience we have Singaporean issuers, we have regulators from South Korea. So this product has evolved and it's becoming a global resource and also an opportunity to improve the participation of the private sector to the real economy. We strongly believe that we should preserve the quality and the key characteristic which ensure the covered bonds as a crisis management tool. We all experience long years of crisis, several crises, and this market was always available to provide lending to the real economy. And we feel a responsibility as industry to justify the special treatment that we receive, to show that this market is a European market, is not a national, we don't have a national approach. We are able to defend our national characteristic under a European umbrella. That's the role of the ECBC.
Still, I mean, the question is then, I mean, what will happen to our investor base in covered bonds? Again, I'm not too pessimistic. I believe investors will come back. Investors acknowledge that this is the only wholesale bank debt product that is not bail-inable, and it has a natural place in the portfolio. So on the medium term, I'm not too concerned about it.
And the idea, I think, of capital markets union is a bit to try to put another wheel on the car and increase the flow of funding to productive investment by trying to mobilize other channels of financing. The answer is not necessarily legislation. In response to my fellow panelist, it could be industry-driven, building and standardization. But I think we, in this area where we're trying to build new channels of financing, it may be that we want to use legislation as an option in some instances. And alongside this, of course, this is long-term work. This is building for the future. So the Juncker plan is a sort of short-term mechanism to try to bring some dynamics to to finance long-term investment using the European Union budget as a first financing line for guarantees. We fully recognize the proven capacity of covered bonds to serve as a financing channel for European banks, one that has stood up very well and even perhaps prospered during the crisis as other funding sources were impacted during the stress. So covered bonds has a proud track record, one that we want to preserve and consolidate, but preserving and consolidating that track record is going to take some investment. It's not something you can take for granted. So I think we'd like to kind of develop or look at ways that we could develop your regulatory framework with you to see if we can allow this instrument to continue to thrive on its own terms, for the label to be very strong and very well understood across the EU 28. But we are interested in, and this is maybe one specific area where the covered bonds experience may be relevant to the growth agenda, as to whether we can look at how that technology can be extended beyond mortgage loans and public sector loans. Are there other assets that could be used as underlyings for the cover pools? Question. We don't have an a prior on that, and we know this is an issue that is hotly debated in the ECBC and where you're developing your own thinking. I'll conclude by just saying we are very interested in hearing from the ECBC on its thinking in this respect. We understand that your preference for preserving traditional covered bonds is a strong label, and looking at solutions alongside that. And I think at the current state of European financial markets, it behoves us all to look very, very actively at any ideas that come out of your industry. These issues will also be looked at, of course, by the securitisation industry, but our job in the Commission will be to try and take the best from all of these discussions and try to hook it up to a program that will hopefully start to make money flow to SMEs and corporates in the near term.
The ECB is in itself very supportive of the CMU idea and supports the thrust of the ideas that are in there. I think those initiatives they could be very promising and interesting, and so I also look forward to hearing more about those. And at the same time, I think if these kind of instruments were to develop, what at least from our point of view is, if they would be to make them, for instance, eligible as collateral in our operations, it would be very useful if there is a kind of harmonization and a strong backing for them, so that it's easier to judge these instruments. And also, if they are more homogeneous, of course, it's easier as a category or as a type of instruments to make them eligible.
Well, first of all, the very fundamental role of ECBC is to be a bridge builder. We are bridging between the different jurisdictions. We are bridging between the issuers and the other stakeholders of this community, that being investor, regulators, supervisory authorities, and even politicians. Our role is to do all we can to get an as effective and smooth functioning covered bond market as possible. But I would say that our support is pretty tangible. I mean, we have created 2 task forces, one on transparency, which is one of the also political and regulatory goals, aiming at basically harmonizing transparency standards across our members, all those who have a covered bond label. And besides that, we have created a task force on long-term financing, where we are evaluating how some of the successful properties of the covered bond could be used or utilized to different financial instruments.
Let's take stock, let's evaluate. As we go forward, let's think more carefully about calibration and proportionality. Do we roll out, for example, banking legislation across 8,000 banks, or do we take account of different business lines and different business models? So this is a genuine kind of regime change in terms of how we will approach new regulation, and it will inform CMU as well, to the extent that the Commissioner has expressed the view that legislation should be a last resort. Our interest would be to try to take our analysis of the market, run a consultation a bit like along the lines of we were doing for securitisation, just to take stock of where we are, whether the current functioning of these markets based on these national regimes is sufficient, whether it could be enhanced by some overlay of European action or not. The question will be there. I mean, if the conclusion is do nothing is the right answer, well, that is probably the conclusion we will draw. But we will try to set out our views on what could be done if some of the elements that were documented in the EBA report and that were mentioned here on public supervision, transparency. I think ECBC is doing a great job on its own initiative, but whether would benefit from some regulatory underpinning is a question we'd like to hear views on. Over collateralization, etc. We are very, very conscious that covered bond label is extremely important, extremely successful, and we're not going to play fast and loose with that label. So we will do things carefully and properly and prudently. And that means taking time to have a serious consultation.
If we could be anywhere, where would it be? take what we need and disappear.